Hey, welcome everybody back to Lunch at the Market. What a day it's been. The S&P has been all over the board. We're talking down 5, up close to 5, back and forth, back and forth. I mean, it was down 5, down 1, down 5, down 1. It was a pretty crazy morning. So, what's going on is price discovery. Price discovery is just a fancy term for when the buyers and the sellers attempt to determine what the market price is going to be, or the spot price. Remember, there's a difference between the spot price and the futures price. The spot price is what price an exchange would happen right now. Meaning, if you were going to buy oil, man, I don't have the price of oil anywhere around me, but say it's $97 a barrel. That would be the spot price of oil. If you go out in the futures market and say you want to buy December oil futures, you might actually have to pay more than that, say $100 a barrel as opposed to 97. It all depends on what people think will happen in the future versus what's happening right now. Spot prices usually are very simple supply and demand. So gold, oil, corn, right? If farmers need more corn to feed their livestock to then take cattle to market, then corn prices go up on the spot market. If in the future it's anticipated that less beef will be eaten, then feed prices might go down, and corn, the out months, the future price of corn might actually decline when the spot price is higher than the future price. See how that works? So basically, you get this discrepancy between the spot price and the future price, and that's what allows you to make money in the first place. Take, for instance, a stock like Bunge, symbol BG. Stock trades at $72.62 right now, with a PE of around 4.56. Now, initially, that sounds like flippin' terrific, right? You get a stock with a single-digit PE. Well, unfortunately, the future PE is 11.13. So what does that mean? Well, it either means that A, analysts have much lower estimates in the future than they did in the past, or something is messing with the numbers right now for the current PE, and that's the case. Turns out that Bunge, BG, sold its phosphate business and used some of the money to acquire some sugar mills. So they got out of a business in which they had pricing power and got into a business in which they're essentially a price taker. So that being said, should we really give as high a multiple to Bunge in the future as we have in the past? Their recent quarter was about $1.49 in earnings. If we multiply that by 4, you're talking about $5.96 of full year EPS for Bunge. Now, if you put an 11.13 multiple on it, which is the forward PE, then the stock only trades for $66.33. That is $6 lower than where the stock trades at right now. But if you give it a 14 multiple on the same $5.96, then the stock gets to $83.44. Now you have a market. You have somebody that wants to buy the stock for, say, the current price, and somebody in the future that wants to sell the stock at $83. Then there's those on the short side that want to sell the stock today at $72.62 and then buy it back when the stock trades at $66.33. And that, my friends, is called a double auction spot market, or a Dutch auction. A Dutch auction is a double spot market, right? Where there's the buyers and the sellers are both calling out prices at the same time, and the trade takes place in between the two prices. Okay, that double auction spot market, right, where they're both calling out prices, is what's referred to as the Dutch auction. And a Dutch auction is basically how all of our capital markets operate. There are things like private placements in which the price of the security is determined by some other metric, and there's price discovery is more about earnings and cash flows and EV over EBITDA and future growth and all kinds of metrics like that. Whereas the spot market, which is the market that we're all watching when we see it blinking all day on our screen, the spot market is where most of the business is done. Okay, so hope you enjoyed learning about our capital markets. If you wanted to take a shot at a company like BG but didn't want to shell out $7,600 or $7,262 for a round lot, that's 100 shares, you could buy Cosan Limited for about $11. It's just under $12 a share. So say $11.76. That's 16% of the investment that you would have to make in Bunge to make in Cosan Limited. And the Brazilian market, ethanol is not a government subsidized fuel, meaning When ethanol is bought in the Brazilian market, it's bought because it's a real viable fuel. Whereas in the American market, if either A, electric vehicles become more popular, or B, natural gas takes off and we use more natural gas for our large trucks, garbage trucks, 18-wheelers, things like that, city buses and local municipalities, then ethanol could really drop in demand. Jim Cramer likes to say, let's burn fuel, not food. And I think that's a good way to look at it. So if the long-term future of ethanol in this country is not so good, then the long-term future of Bunge is not so good. And so you have the person that's betting that the stock is $66 winning over the person that thinks the stock is $83. So whether or not the stock ultimately goes to 66 or 83, that'll be up to the spot market to decide. The buyers and sellers will certainly figure that out eventually. But for right now, if you want to make a trade in ethanol, you can do it a lot cheaper with about the same kind of balance sheet, close to the same kind of cash flow with CZZ instead of Bunge, BG. So what did we do today besides look at why we might not want to buy Bunge? We took a look at the 135, 130, 125 put butterfly. Remember, ideally, the S&P 500 index finishes at 1,300 or 1,310 on June expiration. If it does, this butterfly will be worth $4 or $5. That's fantastic because we paid about $1.60 for it. So it gives us a lot of protection. It gives us protection all the way down to, say, on the low end, 127, right? So if the S&P 500 index goes down to 1,270, then our protection kind of runs out below that. But the 50-day moving average, the 150-day moving average, which Carter Worth looked at the other day on Fast Money, is 1284. So with 1284, we would actually still be in good shape with our, we'd be out for flat, no gain, no loss. And so there's a really good risk reward for the butterfly here because the 150-day moving average is right about where our break-even point is on the downside of the S&P. So we like it a lot. Again, I'm sure it's his old hat by now, but June is the month that we want to get through. The other thing that we did when the other day the markets bounced a bit, we went out, we got some SPY 133 June puts. Again, we want to get through the month of June, but it's really hard to decide, is this the final draft down? Is this a bounce? What's going on? Because every morning we seem to sell off towards the open, then kind of have some kind of rally, and then we maybe fade into the close, but we don't break those intraday lows. And so what we're doing is we're selling weekly put spreads against our long June 133 puts. So this morning we sold against a third of our position. We sold the May 131 puts that expire tomorrow, and then against another third we sold the 129 puts that expire next Friday. Ideally, neither of those will happen, and then the week of options expiration, the S&P will settle at 1,300. We'll make tons of money on all of our hedges. We'll take them off, and we'll start looking to get long. Wouldn't that be just a nice, dandy, perfect plan? We'll see if it happens, but for now, we're hedged. Again, don't forget, we got those VIX in the money, 16, 20 call spreads from yesterday, and we're pretty hedged. We're being very selective where we buy. Again, do that work, do that homework, and get your shopping list ready because the Dow is down 70 for a snap, and then the next thing you know, now the Dow's up 30 points. So you really want to make sure that you've got your shopping list ready and your homework already done. The last thing you want to do is do a bunch of homework when the ticker's flipping really fast by you and you make a decision and then you find out later, had you done some more homework, you would have made a different decision. Thanks for joining us again on Lunch in the Market. Have a fantastic afternoon. If you live in Winston-Salem, don't forget our options class starts tonight at the office. You can get the address and the phone number. Give us a ring. We'll even let you check out the first class without having to sign up. Come on by the office tonight. Class starts at 6 o'clock. It'll be every Thursday for 10 weeks, and it's an amazing price. Go to mofoptions.com to check out the class and give us a ring. Hope to talk to you later, and we'll see you tomorrow on Lunch at the Market.